Thanks for clicking! The Bank of Canada continues to ignore gold while the rest of the world is loading up on it. This according to a recent wording on the Financial Post. And yeah, it's a smart warning with gold prices hitting persistent record highs this year as investors seek out new safe haven assets amid uncertainty emanating out of the United States. And it's not just investors, other central banks are loading up on gold as well, with gold's share of central bank reserves surging upward over the past few years. Yet, the Bank of Canada's holdings of the precious metal continue to remain at zero.
Where's the capital for that?
So what I want to do today is go over what's been going on in the gold market and why central banks have been loading up on it, discuss why the Bank of Canada does not have any, and then take a look at why it could be prudent for it to consider reversing that policy. Speaking of our fearless leaders, the central bank is set to make its policy rate announcement in a couple of weeks with a press conference held shortly thereafter, and we'll obviously have an update out on both on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into the gold market. Onto the gold market. First up, what's been going on with the safe haven asset? Well, first and foremost, its price has surged over 50% over the past year, reaching $4,000 for the first time this week. And there are any number of reasons for the increase in the demand of gold, which we can break down into two camps, investor and central bank. Very briefly, for investor demand, Ed Yardeni of Yardeni Research has noted that gold has traditionally acted like a hedge against inflation, which it is, and it also acts as an alternative to another safe haven asset, that is the US dollar, which has seen its value drop by 10% or more this year. So if you're an investor and you're worried about keeping the value of your money safe as the central banks around the world continue to print up a storm, you can either A, buy a US Treasury, which is going to pay you back in a currency that is losing its value, or B, you can buy a hard asset, the value of which continues to rise. So that's the increase on the investor side, but there's also the central bank side as well, and we're much more concerned with that.
I'm kind of a big deal.
China's central bank has been buying gold for 11 straight months, and it's not just them. Russia, India, Turkey, Japan have all been loading up on gold this year as well. In fact, overall central bank holdings of gold throughout the world are starting to overtake that of US Treasuries. Now, that's not at all to say that central banks are dumping US Treasuries or that the sky is falling. It's not that type of channel. But we are seeing a general move in favor of gold over US Treasuries. And as to why, it's important to first understand what central banks do, or could do, with the reserves that they hold. A point which is going to be very important later when we talk about the Bank of Canada. Mainly for our purposes, central banks can and do use their reserves to defend their currencies and support their monetary policy. As argued by the New York Fed, foreign exchange reserves also absorb pressure on currencies during times of crisis or when access to international borrowing is curtailed. And on this, a few quick examples. Say, for instance, the value of a country's currency starts to depreciate at a rapid pace. That country's central bank has to intervene to defend the currency. And they do so by buying up that currency out of the market, like we saw with Japan in 2024. Japan did that by buying up yen out of the international market, decreasing the amount of yen available on the market, which pushes up its price. And to do that, it used US dollars. It used those dollars that it holds on reserve to buy up its currency. If you want to buy your currency back from the market, you have to have reserves. You can't buy your currency using your own currency. You need something else of value, which, as has been the case for the past bunch of decades, as has been the case for, say, the past 70 or so years, that's been the US dollar, the reserve currency. But if you're worried about the US dollar, say just about its value, which has dropped by 10% over the past year, or say your access to it, your ability to get your hands on US dollars, then you're going to start to diversify the reserves you hold on hand, as one day you might have to defend your currency.
No way, never happened.
And we're starting to see central banks express these worries about the US dollar through their purchases of gold, looking to protect themselves against sanctions or the devaluation of the US dollar, both of which would limit their ability to defend their currencies at a later date. A survey of central bankers earlier this year found that 50% of them thought restructuring or a soft default of US debt was possible. If you think that the value of your reserves is going to plummet, limiting your ability to do the thing you need them to do, buy back your own currency, then you're going to look for other ways to diversify. You're going to look for other things of value, in this case gold, in case you ever need to buy back that currency.
No way, never happened.
Unless that is you're the Bank of Canada, which, as mentioned, has zero. And as to why our central bank doesn't have any gold on hand as of right now, that was explained by Deputy Governor of the Bank of Canada, Timothy Lane, at a speech in 2019.
Canada sold its gold at a gradual and controlled pace and invested the proceeds into U.S. Treasury securities and other interest-earning assets. And the view certainly reflected in that was that gold bullion was not as liquid as those other securities, and also that to the extent that you're dealing with physical delivery, there are costs of secure transport and storage.
And yeah, we can see that thinking in the central bank's reserve holdings, with nearly half of them being composed by US dollars. So if there was ever a problem with the Canadian currency, if our dollar ever started to plunge and we needed to reverse that, the Bank of Canada could use its US dollars to buy back that Canadian currency. That would limit the amount of currency out on the market, which would push up its value. Unless, that is, the value of those US dollars had shrunk to such an extent that we were limited in our ability to buy back our own currency. In that case, we would need to have something else on hand to get back those Canadian dollars, such as gold. And most central banks see it this way. Right now, Canada, having zero gold on hand, is in the company of Norway, Armenia, and Croatia. Even Fiji keeps about 3 million on reserve.
We don't have those Enron-type connections.
Now, the Bank of Canada will say that it doesn't need to have any gold on hand as it has a flexible exchange rate. Literally, asked anything about the currency, that's what it will say.
Flexible exchange rate is a flexible exchange rate. Flexible exchange rate. The flexible exchange rate. Flexible exchange rate.
But it would seem prudent, given the rising levels of uncertainty throughout the world as recognized by world central banks, that Canada maybe pick up at least a little bit of gold. Maybe just enough to bring us up to Lithuanian levels.
How you like them apples?
Except, and here's the quiet part said out loud, I think the government and the central bank very much understand that were they to resume gold purchases at this very moment, under this current president, that would probably make headlines. The government, the central bank, don't want the Grand Master seeing headlines out there saying Canada has resumed its purchases of gold, while they're already having enough problems with the United States over trade. So, as the price of gold continues to skyrocket, as central banks around the world are diversifying their reserve holdings, Canada continues to have zero, and as we've seen today, it might be prudent for them to reverse that policy. Perhaps the central bank governor will be asked about Canada's gold holdings at the next press conference in a couple of weeks, and we will obviously have an update out on that conference on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.